So exciting group again. This group is going to be on the decentralized exchanges. As I've said before, I think we're going to see some common themes come back around, but with a very different perspective from a very interesting group of people. And with that, I'm going to hand it to Mark Albertson to really take it from here.
Thanks, Pierre. I'm looking forward to this discussion. This is a very timely topic. There's a lot going on in this space right now. I've written about it for SiliconANGLE, and so let's just get right to it here. Why don't we have each of you begin just by briefly introducing yourselves and telling us about your role in the market space. Adam, why don't you kick it off?
Oh, very good. My name is Austin Alexander.
Austin, I'm sorry.
Is it on? Hello, my name is Austin Alexander. I'm a VP at Kraken Exchange. We're one of the largest cryptocurrency exchanges. I've been trading Bitcoin since 2011. I've been in the industry full-time since 2013. I founded an exchange before I was working at Kraken, which was kind of pushed out of existence by some regulators, and been with Kraken for 4 years now.
Great. I'm Ken Kavanaugh, and I think they put the guy who's running a decentralized exchange right next to a guy who's involved with a centralized exchange. So we'll have some good debates, perhaps. So I'm an advisor to Alcoin.io. Was involved with Luca Exchange, which is a Zug-based decentralized exchange. It's sort of a pioneer when it comes to security token issuance. But now I'm actually working with Everbloom, which is a decentralized exchange that focuses on pro traders and institutional traders, and really our big thing is trying to create this meta pool of liquidity, because that's one of the biggest issues I think with decentralized exchanges, is the fact that there just isn't enough liquidity. So that's my involvement.
My name is Bryce Clemmer. I'm currently the Chief Strategy Officer at IHT, or ihouse.com. Synopsis on my background: I was on the original iPhone team. I first invested in Bitcoin in 2010 when it was about 9-10 cents. Yeah, I'm looking forward to an insightful conversation.
Hello, I'm Itul. I'm venture partner at FBG Capital, which is the largest crypto fund in China. Also has the FBG1, which is one of the largest market making and then OTC trading firm. And in San Francisco, I'm running a small research and acceleration company. And I came to the space in 2014, and then I was a developer, blockchain developer, worked for the Visa card and a couple of other banks and financial institution, and also enterprise. And last year, I set up a crypto fund in South Korea, which became the largest crypto fund in Korea, that rebranded into the Hashed. So I've been in the space as the developer, investor, advisor, and I'm also the, working on the business development side as well. So very happy to be here today.
Okay, excellent. So let's kind of level set, just so we're clear on what we're talking about here with the topic of decentralized exchanges. What's the core value proposition of a decentralized exchange? If you could explain that right now, what would you say that would be?
I'll jump in. I think the core value proposition is security. You look at, we're still in the infancy of trading, and we're finding that there's still so many security breaches. The value of the decentralized exchange is that you're actually taking the threat from the exchange. If I were a hacker, I'm going to be spending all my time trying to hack into one of those honeypots, which is really the centralized exchange with all the custody assets. So by trading on a decentralized exchange, basically offloading that security threat, because no one hacker is going to try to go after one single wallet. Really, they're going to go after the honeypot.
Well, I'd have to also add, maybe it's not good for the branding of the decentralized exchanges, but at least as important a value add is anonymity, or you could say privacy, but the reality is that that's a huge aspect to it, and probably, in my opinion, we can talk about this more later, but probably long term will probably be even more foundational to the niche that decentralized exchanges come to offer, and would probably in the long run make them pretty successful. Decentralized exchanges in the long runs, I think, are going to be pretty antithetical to what regulators and authorities want in the future. And this is one, I mean, we're getting way ahead of ourselves, but this is probably one reason why regulators worldwide should be very cautious of how they approach this industry and these markets, because obviously regulatory arbitrage has never been easier than with cryptocurrencies and Bitcoin. But the security is another one of those are the two essentially core value propositions, are anonymity and security. I think though what we've seen so far flesh out is that the theoretical security benefits are not yet realized. We've seen a number of compromises and bugs, really, and you know, some, I'm not well versed. I should have done a little more research just to catch up. But I remember, you know, Bancor that was a hack, right? That was not just a bug. So we've already seen decentralized exchanges compromised as well. Maybe we can go into it further, but I was also, even if you have a hybrid model that has centralized order book with decentralized custody, I think order books, matching engines are also extremely susceptible to funny business. One of the reasons why we have seen not so much of that, and most of the hacks have been from kind of just key compromise, is because key compromise is more lucrative and more straightforward, but compromising the integrity of matching engines. The first major hack in the industry, which was when Gox, probably not the first major hack that I was aware of and witnessing, and I watched it happen, which was really interesting, was I believe it was 2011, and Gox, the coin went from like $30 to 1 cent in about 20 minutes, and that was not because the market was deciding that the fair value of Bitcoin was $0 or 1 cent. It was because somebody got into the code of the matching engine and dumped it and ate it all up on the other end and withdrew it. And so there's still, and that's not even to be, obviously I'm no expert, I don't think anybody's an expert, but on the actual structure of these contracts and the various ways that the DEXs are structured, I'm no expert, but structuring these things is very difficult, and we've already seen numerous times bugs that have kind of destroyed, at least, obviously these things are still alpha for sure, but bugs that have destroyed at least that theoretical value proposition. But we got years to come. It's a long game.
Sure. Well, I think a very rudimentary example of kind of a matching engine, or so at least they referenced, was Noble Bank. Noble Bank was extremely inefficient in the sense that it matched people together in relation to who wants to buy, who wants to sell. However, the custody was on you, and thus far, as you've seen, and kind of as I predicted in the beginning, they've tanked, and a handful of companies in this space who I happen to know left the platform largely because they couldn't get a deal done. Couldn't even get one deal done, no matter the size. So yeah, I think the space, as it matures and it develops, will evolve from kind of a centralized framework to something else, to think of it as a 2.0 model per se, and decentralized or distributed, whatever we may call it or describe it, to be determined. But at the same time, I think largely what still has to happen in the industry is we have to see larger adoption in terms of payments, because then that means our society, specifically in commerce, actually derives value from this space, that being crypto. So until that really begins to occur, we can debate all we want, but we won't really see progress and in essence even traction. So.
Yeah, actually, I was listening to the Austin's the comment earlier, and just realized how old the mountain goats hack happened so long ago. Just thinking of how time flies, and then, yeah. In addition to his point, and then the other people's point, and then I think the decentralized exchange, one of the value proposition is the fairer market, because I think one of the biggest problem right now, a lot of people criticizing about the centralized exchange is the front running issue. Market making and then creating lots of spread to fill in the price gap is kind of like a necessary evil, because without it, the market is not working. Because if you want to buy a milk and then your price range is only $2 and then $200, but you want to have the different price of the product, right? So this filling in the spread is a necessary evil, but at the same time, this market is all about the information, and the information arbitrage can make you so much money. And then all this price information that hitting the market, the first place all this price information and the hitting is the centralized exchange. So centralized exchange can doing the front running, which is necessary for the spread, like a price spread issue, but still it can make so much money. So it can come into the ethical point, and then am I doing this for the making money, or am I doing this I don't know, making the market work? And then so I think the decentralized exchange can help, can be a quite an interesting model for this issue. But I guess I don't know. I had a brief discussion with Austin about this one, not this one, but I think price discovery maybe the Austin can be interesting to talk about, because the price at the end is all about the price. It's really important that what the price is settled, and then decentralized exchange has a massive challenge in terms of the price discovery.
Well, all right, let's talk about price discovery then, since you raised it. I think that's a good topic as well. What do you see right now in regards to the merits or perhaps disadvantages for either market when it comes to that? What are you all seeing in that area right now? Let's go with that.
Well, I'll step in there. There has been an issue with price discovery in decentralized exchanges, and I think that's a function of really the lack of liquidity. One of the things I know we're doing at Everbloom is trying to plug in to all the various order books that act as silos. Right now, even centralized exchanges, we're all managing these silos of liquidity. And when you compare that to like the equities market, where it's incredible, the size difference. So you're going to naturally find, you're going to get to that price discovery a lot quicker, and it's going to be less of a spread, which drives more traders into the market, which increases your liquidity. So it's this virtuous cycle. One way I think we're trying to attack that is being able to sit above all the other decentralized exchanges, and by plugging into their order books, give traders the opportunity to have that wider base, kind of that meta pool of liquidity to hopefully get to a better price discovery process.
There's a lot that goes into that. I think we're decade plus away from it even be theoretically possible for like decentralized exchanges to be the main venues for price discovery, and there's a few reasons for that. One thing is just speed, right? I mean, decentralized anything is never going to be able to be faster than a centralized version of anything, period. It's possibly, maybe it could be fast enough, and we don't need to measure in picoseconds like they're doing with the microwaves between Chicago and New York and all that. But the speed of these real decentralized exchanges, where the actual matching and the database states are like all happening on smart contracts. I mean, how do you do that? It's possible that a hybrid model, especially like post Lightning, where you could really it would make it much faster, that it would be at least tolerable speeds relative to centralized exchanges for a certain market niche. But price discovery, yeah, it's about speed, it's about liquidity, and it's those things, not the speed, but the liquidity, and one of the main factors there is just the user experience. And the user experience, even with all the KYC and the hassles of the AML and all these things at centralized exchanges, the user experiences aren't completely awful at all the centralized exchanges. They're close to completely awful, but they're not completely awful. They're just bad. But it's definitely nowhere near there, and it will never be able to compete on speed ever. And everybody should remember that if anybody's ever trying to sell you a blockchain and they're going to say, what are the advantages? Oh, it's faster. You can just write that guy off right away, because it's just nonsense if anybody's trying to sell you on that.
What do you think about what CZ's working on, and given they're going to release something here, likely or unlikely by the end of the year, but more likely by the beginning of the year? What do you think? Because that's the core thing he's focusing on, which is speed.
Well, I mean, we'll see what it comes. I'm highly skeptical of that, and 99% of what all these blockchain gurus are trying to sell everybody. So we'll see. I doubt it. And then there's another aspect to it, right? Is that what do you mean decentralized? Like, right, what chain are you building your decentralized exchange on top of? Because let's say you start putting it on some chain somewhere that's not Bitcoin and is not Ethereum. I don't think any of those, if any real money starts turning over on any of these other chains, you're going to see in some time, it might take some time, but if there's real money turning over, you're going to see how secure these chains are, because once the incentive is there financially for somebody to devote resources to attacking or reorganizing these chains, I mean, besides Bitcoin, in my opinion, pretty much every other chain is highly insecure should it come to any type of, and Ethereum too is rather secure, but the most of the rest of them are just completely insecure if there's any real activity on there. Luckily for all these other chains, there's barely any activity on any of them, so it doesn't really matter. But when and if, and it's a big if, there's actually activity on any other chain, well, then that's the huge bug bounty, and most of them are just going to get smashed.
About Binance or for me, I think always coming back to the network effect in terms of the service-wise, I guess my biggest concern about the decentralized exchange, maybe it's a little bit too early to be worried about it, because we are still in the very beginning of everything happening. So, but I think the exchange is all about maybe the network liquidity. So that's why I guess the 0x protocol decided to do it, to share a lot of different liquidity, but with the all these raiders. But I think currently the Nasdaq has the 130 billion trading, and then the NYSE has 55 billion, and Binance is one of our largest one, is 1.3 billion, and then I'm not sure the DEX, the volume right now, but it was in August, it was 35 million or 25 million. I think it's still massive liquidity gap is happening at the same time among these DEX. So it's just so fragmented. And then I was looking into the DAU of most of the different DEX, DEX, and then IDEX, and DDEX is the largest one. It's still 1,000 or a few hundred people, so it's quite a small amount. I guess for me, the network effect currently in the DEX is the largest concern for me.
Yeah, and I think that it's all about serving the needs of your customer. Right now, centralized exchanges are doing a much better job of meeting the needs, and that's why you have more users on those exchanges, because it does come out. I just want best price, and I want certainty that my transaction is going to close. And that's how it is in securities. That's how it is in FX, and it's no different with this new asset class, the crypto asset class. And right now, I agree. DEXs have not stepped up, and maybe that's a function also of the protocols, the infrastructure, layer 2, I mean, they certainly play a role in transaction speed. But, you know, to date, usability has been a little more difficult on a decentralized exchange. And again, the liquidity. So I think it comes down to meeting the needs of the customer. I think, you know, if we can do that, if you know, the other guys can do that, Binance, if they can do that, I think you're going to start seeing money inflows. But until then, it's really comes down to like who best meets the needs of the customer.
Well, as often happens in the tech space, market forces and big players get involved. And of course, we're seeing now Binance is about to launch a beta version in the early part of next year for its own decentralized exchange. What do you think the impact of that will be on the market? What's your read on Binance's move?
I think very, very little. I don't think people are. I just don't think it's ready for prime time DEXs. And I should put some caveat, like, okay, so maybe some of these chains are secure, just for what I said before. And if, you know, besides, you know, Bitcoin, Ethereum, if they're secure, it's probably most likely because they're not decentralized. You know, most of these blockchains, they're claiming decentralization. They're not decentralized. You know, all the tokens are held by one guy. Nobody's really, there's, you know, all some crazy models that have not been kind of stress tested, and these consensus mechanisms that are all theoretical. I mean, even proof of work is theoretical, but I mean, it's all an experiment right now. But as far as the Binance DEX goes, minimal impact.
Well, I look at it more as experimentation. So because they have so many resources, so many more resources than others in the space, I will look at what they release and the team over there as a framework. That gets launched, not necessarily something that I may or may not use, but it'll be looked at as a framework, right? Because essentially, you'll, based on the folks over there who are working on this, they'll have thought through a lot of these different challenges and proposed that their, you know, version of a DEX will be a much better solution. So we'll see.
And you know, I know that Binance Labs is actually reaching out to a lot of different developers. So they're not necessarily, I would be surprised that with whatever version they come out with, it won't be the last version. They're going to test different models. There are tons of models. I mean, I'm involved in another project that's utilizing Plasma, you know, to try to deal with the transaction speed. And then there are just dozens of ways to attack this. So, I mean, to answer your question, I think it's good. I think it provides some legitimacy. You know, it's a testament to, like, it's a business model that has merit. But yeah, I agree. It's not going to move the needle too much, the fact that they're launching their own DEX.
I would also like to point out, I hope it's wildly successful, and I hope decentralized exchanges come to overtake all markets globally, and that the entire world is decentralized, and, you know, we have a free society, and it catalyzes an economic golden age that humankind has never seen before. But there's some hurdles in the way.
Amen.
Yes, I completely agree, and then we are going there. Yeah, I think Binance, the impact of Binance, I'm actually very looking forward to seeing it, because if one of the use cases still working in this industry is the exchange, isn't it? Like at least someone who made money out of this industry, and then it's exchange, still making money even in the bear market. So it's a very proven use case in this market, and then if they can actually successfully decentralize it, and that's a really great success for us. And I think maybe two key factors that maybe can determine the success of the Binance decentralized DEX can be one is the crypto pairing, like what will be the base pair, and also how open to all the crypto they can list, because all the projects want to be listed in the on the Binance because of the liquidity and user. And then the second, maybe it's always the same thing, same question. When the project wanna traditional business, they wanna do the reverse ICO, and then how much you wanna take a risk of the cannibalizing your own business. So for the Binance, and then how much they wanna share their existing user from the centralized exchange with their new decentralized exchange. I guess those two are the key factors. So I guess very looking forward to see what they are going to do it with it.
Yeah, I'd like to touch on maybe Yusula kind of mentioned kind of an elephant in the room, and that's that how do you get decentralized exchange with fiat currency? Like, what bank is going to play with decentralized exchanges? The compromise that a decentralized exchange would have to make to get banks to play along, I promise you, will mean that they're no longer a decentralized exchange, and pretty much all the value add is gone. Now, I mean, the custody value add perhaps, and you could have, you could think of like, oh, theoretically, but most likely, besides stable coins, you're not getting banking in a decentralized exchange. And now this, Tether's one thing, but these new model of stable coins are all like kind of big brother coins anyway that will shut you down. Oh, this coin traded on XYZ DEX, and we don't like that DEX, so we're going to confiscate your coins, and that's built into the protocol. I mean, that's a giant barrier to entry. Luckily, for DEXs in the current moment, pretty much the use case for crypto is speculation. So it's fine to have just trading back and forth because nobody's actually using anything for anything. It's all just speculation. But should someday this thing actually bloom like they have, no pun intended, but should the dream that everybody's trying to sell you actually come to somewhere near reality, that's going to be a giant problem.
But that's why I think the core value of a DEX is security. It's not so much the identity. I come from the old fintech world with E-Trade, and I think you have to have KYC, you have to have AML. It's a reality. So if there are people who no longer want to trade because they don't have the anonymity, I don't know where else they're going to go except like these deep dark pools. So I think you're still going to have users of DEXs because it goes back to the security issue, and it's not necessarily just because they're able to maintain their privacy.
It's good to talk about that, and I agree, right? I'm not going to let anybody else touch any of my keys, period. But that's not how the market reality has shaped out thus far. There's an absolutely disgustingly irresponsible percentage of coins that are sitting on exchanges and with third parties. The market so far has basically demonstrated. Now, I hope this will change with education and sophistication, and as the grandpas leave the companies. I was going to say die out, but hopefully they leave their companies and live long, happy lives playing with the grandkids, and you live forever. But they're going to leave. The kids are going to come up, and maybe they understand better and are more comfortable with actually holding their own money and their own. Because most people before crypto, they've never held a cent. They have a few $100s in their pocket or a necklace in their jewelry case, and that's it. No one has any. The concept of being responsible for your own money is just so foreign to everybody, and so that is a good theoretical value add for the DEX, and I like it. I love the idea of that, but the market has not really demonstrated that people really care that much about it, because hack after hack after hack, and yet still the vast majority of coins, especially of coins that have actually moved within the last few years that we know for sure aren't dead, are sitting with custodians.
Yep, and I think that's why it goes back to best price and execution, and that's where DEXs have to step up and meet those needs. Until then, I agree. It's going to be.
I also think that best price, at least from the fee perspective, that's very difficult that a real decentralized exchange is ever going to be able to compete, because centralized services are simply cheaper. If somebody's also trying to sell you blockchain because it's going to be cheaper, they're also, kind of full of it, right? Because it's just easier. It's easier to truly decentralizing things in a secure way is not cheap. It's expensive. Like, blockchains are expensive, slow databases. The only value out of the blockchains, even theoretically, the only theoretical value out of blockchain is that it's immutable, it's censorship resistant, it's unconfiscatable. It's basically the things that come with decentralization. And decentralization in reality, when it matures, because most of the decentralization people are selling you aren't decentralized, but real decentralization is not going to be cheap.
And just maybe to close on this, when I say best price, I'm referring to the price of the security, not the fees to trade.
It's all part of the same.
Okay, yeah, Ciel, you got
Yeah, I guess I don't really agree with you about the blockchain is completely slow and really expensive all the time, because the layer one should be slow and most secure, But layer 2 can add all the functionality to make it faster and then make it, I don't know, different way the secure and then adding the more functionality. So I think the layer 2 can provide a lot of different function by the use case, which can maybe serve all the requirement of the successful exchanges. So I think don't curse yet. I guess we are going there.
Things, right? There's two things. There's one is like the reality as it stands, and I literally pray every night that you're correct, man. I got my pray for the success of plasma and lightning and everything. I mean, that's all I want in life, man. I'll die happy when lightning is working and it's live, right? I mean, it's a non-alpha, right? Whatever they call that. It's production ready 1.0. I pray when Bitcoin Core is 1.0, right? But that's not where we stand now. It's all theoretical pie in the sky, which is everything this entire industry is. That's why the only use case now essentially is speculation.
If you think that this is, I completely agree. I guess the time go to market right now is quite challenging. So I don't know when will be the true decentralization. But what do you think of all this Coinbase buying decentralized layer companies, and then also the Binance is building like decentralized exchange? Did you really try to run the market, or that it's a marketing purpose? I don't know. What do you?
Well, I mean, I think I think it comes down to customer segmentation. There are people who probably never want to use a centralized exchange for different reasons, and so if I'm a Coinbase or a Binance with a dominant position in the market, it makes sense to actually start rolling out other offerings to carve out that market and fully protect their position. So I think it's more of a customer segmentation marketing approach, having a full suite of products and offerings.
Well, and it really comes down to a few basic things, right? In order for whether it's centralized or decentralized to gain mass adoption, which is ease of use, security, and usability to a degree, utility. So can you derive actual utility from something that holds your money in a secure fashion? That's what banks have done for decades and ever since we can remember, and that's why they remain incumbents in the finance space. So similar to what Binance and Coinbase are doing is they're quickly developing large businesses, and they've identified that, and so they're just experimenting. They're iterating quickly, and just seeing what will catch and what they can ship and what ultimately people will use to help kind of facilitate, exchanging money, or let's call it digital money, every day for goods and services.
Well, let's unpack that a little bit, because when I was doing some research in advance of our panel, I came across a quote from the CEO of Changelly, who said that the technology for decentralized exchanges hasn't been perfected and is still a ways off. I think he even said a long ways off. So do you agree with that? What's behind the technology problems? What are some of the things that are going to be a factor, and could this be an issue moving forward? Technology and decentralized exchanges.
Yeah, I would agree. I think just speed is the #1 thing for kind of true decentralized exchange, where like the matching engine and all that is decentralized. So I think in the medium term, then the successful decentralized exchanges will simply be kind of centralized exchanges with multi-sig wallets.
And I think it's not so much about the decentralized exchanges technology. There's a symbiotic relationship with the layer 1, layer 2. So as we start seeing technology improve within layer 2 and transaction speeds are better, then that's also going to help decentralized exchanges. So it really all aspects of the blockchain need to improve for this to reach, go past the chasm and reach a point where there's main street mass adoption. That's what I'm all about. I think we're years away from that, but I cannot wait, until we figure this out, so that now imagine a day when you have your portfolio, 60% equities, 40%, bonds. Nowadays, most people, when they're managing their portfolio, they have a free percentage in say international equities, right? Something that's a little more aggressive. A day when actually maybe 5% of the portfolio is strictly involved in these digital tokens, which really in effect mirrors like venture investing. And that, maybe we can talk about regulation at some point too. But
Well, the biggest one, in my opinion, is going to be security. I don't know if anyone here recalls using Napster or LimeWire back in the day, but essentially it's not an apples to apples comparison, but it's a peer-to-peer comparison in the sense that back then you could share any files, right? Whenever you'd share files, you never knew who you'd pair up with, right? You just pick whoever was the highest streaming, user on the other end for that file, and you assumed it was safe. Well, at the end of the day, a lot of those were viruses, right? And so from my point of view, I think in the future, if I'm going to be exchanging money on a decentralized exchange, I better damn well know who it is to a degree, because I want to make sure it's secure and I'm not just sending my money or trying to buy, something that's not really there. So that, as well as essentially downloading or whatever it may be in the future, however they choose to infiltrate, your decentralized account or accounts, knowing that I won't download a virus or have one injected into my accounts that ultimately just wipe out everything I have, not just for that transaction, but from all my other wallets. So I think that's going to be the biggest, security being the biggest issue that folks will have to overcome. But, over time, we'll figure it out. But that's why fundamentally it's going to take time, is because there are a lot of issues underlying or preventing mass adoption from occurring. And that's a secondary one, but I think that will be the biggest.
For me, it's successful productionization. I think a lot of people ask me when they want to doing the reverse ICO of the traditional business, and then we always assume that it's going to be the same product or not. And then I think even in our panel discussion, when we discuss about the Coinbase, why they're doing it, and then they answer the customer segmentation, expanding the customer segmentation, which means actually the decentralized exchange, even from our discussion, the decentralized exchange and the centralized exchange are still two different products, so with the different technical feature and then serving the different type of users. I think right now the decentralized exchange, with the current feature, I guess quite a limited user. I guess we are still identifying. I guess so. Maybe the successful productionization to find the better user needs and then the better user segment. I guess that can be a really key factor, I guess.
So let's go to regulation. We had a panel before this one that was quite lively in the discussion of that issue. The SEC has indicated that they're willing to talk and have dialogue, and at the same time, they've dropped over 100 subpoenas on this industry. So where do you see regulation in the form of decentralized exchanges, and how could that possibly affect the businesses that you're involved with?
I think so. If you apply, and I'm not going to repeat everything that's been discussed before, so just real quick. If you apply the current definition of accredited investors, which is making $200,000 a year or having over $1 million in net worth, and those are Reg D laws, by enforcing that, of course you're going to have a shrinking pool of investors in STOs. So in the short term, you're not going to have the same kind of volume that we've been experiencing. But I'm hopeful though that at the SEC is favorable towards this asset class. I think it was back in August, the SEC Chairman Clayton, in a talk mentioned that his personal goal is to have more Main Street involvement in private securities. That's traditionally dominated by Wall Street and VCs. So shortly, they're going to be issuing what's called a concept release and asking for industry commentary on how to make the process, how to streamline this private security process, and also expand that accredited investor pool. One of the ideas would be like, creating a license process or asking for additional education. I think that's something that's not going to happen, obviously, in the next year. But as the industry matures, as the regulators are more open to this, I think it's natural that SEC Chairman Clayton, if he wants to have more Main Street investors, then I think it makes sense that blockchain and digitization of assets is a great tool to enable that.
Well, in fairness to the SEC comment, those subpoenas were primarily more geared towards information gathering rather than going after folks, for the most part. And there are some very intelligent folks over there working on trying to figure out how to exactly create a framework for this industry. The challenge is the industry is evolving so quickly that they are, after all, a government agency, which essentially moves very slowly. So that's, in my opinion, kind of what they're battling, is trying to keep up with all of the innovation occurring and figuring out exactly how to create some form of kind of modus operandi for people to follow, but yet not squander any potential future innovation. So
I don't envy the job the SEC has to do. Yeah, it's a tough one. When Bitcoin was released, the regulatory paradigm shifted forever, and it's taken 9 years for most regulators to really understand that, and it's going to shift way more. I'm surprised actually how well they've done. They probably could have done a better job. The CFTC as well is I believe they're doing quite well relative, but things could change. The path could change from American regulation, and also, surprisingly, the U.S. is not the world, and there's hundreds of other regulators around the world, and some of them aren't doing so great of a job, although mostly they seem to be relatively hands-off in the aggregate globally. But that is, it's going to have, as far as that, how that relays with the future course for DEXs, it's going to be very important, because should the global tone shift, if you have the Financial Action Task Force next year comes out with some proposed global framework that's just super iron-fisted, that could, fast forward the kind of DEX adoption by a lot, because crypto assets are so fluid. They're unlike anything ever before, right? All other in the past, all securities and everything, it exists like kind of hypothecated in native to like whatever exchange it's trading on. So you can come and just clamp down on it so easy. But with crypto and with Bitcoin, you come and clamp down on it, it's going to slip right through your fingers and go somewhere else like whack-a-mole. And this is why the regulatory paradigm has shifted, because the regulatory arbitrage in this way has never before been. I mean, and we haven't even seen it. We haven't even seen the beginning, not even the beginning. And so if globally the regulations are going to be stiff, and then there are going to be a lot more resources put into making sure these DEXs operate. There's going to be a lot more demand for it, and also I think you're going to see is that in the more tyrannical anti-crypto jurisdictions, there's going to be a lot more demand for decentralized exchanges for now and forever.
All right, I don't want to let us get too far down the road without giving those of you out in the audience a chance to ask questions. So does anyone have any questions for this panel about DEXs?
So what's it going to look like for tracking securities? What is your guys' take on whether or not these security tokens are going to have to be tracked and accounted for transaction by transaction?
I think that's really going to be key. Like Harbor and those different companies, Shares Posts, Templum, all these different what I call ecosystems for regulators to allow them to be in that business. I think you're going to have some kind of tracking aspect to it, because how else do you? It's with Reg D, with like good old fashioned Reg D. you have to register. Your name is in a in a file in Washington D.C. and people know when you assign or transfer that investment in a private security to someone else. But obviously with digital assets, it's so much more fungible. So I think you're going to find that regulators are going to want to work pretty closely on that issue, which could be exciting too. Because I feel like the regulators aren't. I think they're doing a decent job of allowing innovation to occur. But that's one area though. That's one area where they're going to have kind of a pretty fixed view on it, which is making sure that you can track it across jurisdictions.
Could you elaborate on the tracking? Are there existing solutions that you think would be useful? My company's partnering with Templum, so I have a keen interest in this.
Yeah, I mean, Templum, Harbor is another company you want to talk with. I mean, there's another company out of Boston, I forgot their name, but they're not as further along as. Tracking solutions that I like. I really think that Harbor is not a bad solution. I think as far as Everbloom is concerned, and some of the other projects I'm involved in, I'm going to be talking with all of them and just seeing which one. It's really more about which one will be fully adopted. One may be better than the other, but if it's not adopted by everyone, then it's pointless.
Thank you.
Are you talking about like blockchain forensics tools, things like that?
I was trying to actually understand the gentleman's point a little further. I think the tracking. I think you mean tracking is in like KYC and.
Yeah, I believe that's what you're referring to too, right? So KYC, MAL, and now having that information associated with some kind of token that identifies that you're accredited, and then that way you know that so if I'm an exchange, I know that I'm in compliance because I know that I'm facilitating a transfer of a security token from person A to person B, and I know that they're both fully accredited. And having that on the blockchain versus having like good old-fashioned paperwork and trying to determine who's accredited and who isn't.
Well, to that point, actually, I'll play devil's advocate, and I think a lot of these rules, quote unquote, that we're used to following in traditional finance worlds are going to completely get rewritten, because where I've seen more adoption occur and more crypto adoption occur have been in third world countries, and obviously people there aren't accredited investors or just people to even use it. So I mean, I was just down in Latin America, in Argentina, a couple of weeks ago, and folks were buying crypto at the local 7-Elevens, or at least their equivalent of that, with $50 cash. What they do is they all prepay, their phones, and they go into these stores, and that's how they pay their phone bills and/or whatever services that they tack onto those phone bills. And it just so happens one of the companies down there that's looked at or perceived as the Bitcoin in Latin America has deals with all these 7-Elevens, and people can go in and put $10, $2, $50 in and against their phone bill, and they buy Bitcoin from it. So I think all of these rules, which for finance, at least the way that we know it, are going to completely just get rewritten as it pertains to this space, largely because the beautiful thing about, let's call it crypto, or at least when I got into it, we only looked at it as Bitcoin, but for Bitcoin, it's all software. It's digital, it's online, and it's global as a result. So for my point of view is I don't think any of that stuff, some will still apply, but it's going to completely get rewritten.
Whose responsibility do you think it will be as we have tokens that represent real world assets? So for instance, you tokenize a mortgage loan with a promissory note and a mortgage, or a pool of them, and these tokens whirl around in these underlying legal documents that are needed to go into court. How are they going to stay tethered to the token, and what role do the exchanges play as currencies move or tokens move and documents stay still?
Great question. And actually, this is many folks much smarter than me have opined on this already, and or even started investing into a few companies working to solve this. And so your question, taking a step back, is more around the tokenization of assets. And the one industry that has a lot of promise in this space, and I believe, well, and agree with some others, will be real estate. And so, not for a shameless plug, but if you go to ihouse.com, you can see what they're doing, and they're perceived as the leader in this space, actually. So we've raised $30 million initially, and we've done a few offerings where folks can buy and sell into real estate assets. So when to answer your question more specifically, contracts and court, et cetera, that'll all be done digitally through smart contracts, among other things. So paperwork per se won't necessarily be needed. You'll have an account. Think of it, the analogy to simplify all of this would be Airbnb. So you go into Airbnb, you want to rent a place, right? You don't fill out a contract like a renter's agreement for the week. You just go on, you say, I want to rent this. The other person says, sure, I want to rent this. You check the box that says, I agreed to abide by all these things. The rental owner says, I agree to provide all these things with limited liability, et cetera. You pay the money. The money goes from one bank account to the other, and you rent the place, right? Think of that as real estate. So let's say you own this skyscraper here, whether it's here, Beijing, Tokyo, you name it, and you're a developer, and you say, I want to raise $100 million to build this. Right now in the traditional world, you have to either go to a family friend who has a family office and can loan you that money, or you go to an institution, namely a bank. Well, with crypto, or at least blockchain, what you can do is these building developers go onto this platform, and they say, we're building this resort out in Tokyo. We're raising $100 million. We want to make it available to the network. And whoever holds an account there can sign in and say, hey, I want to buy $10,000, whether it be a share or a utility portion of that resort. And over time, just like Airbnb, right, as long as you have a critical mass in users, those developers can raise the money, develop the real estate, and the others can either buy or sell at any given time. So what's fascinating is, I think real estate, it's been traditionally an illiquid asset, will become a liquid asset. And it's going to be fun to watch, because I've already started experimenting investing in places out in Tokyo and in China through this platform. And it's pretty damn cool to where, you think, okay, that market's hot right now. I'll put in 10 grand, even $1,000 or 100 grand, whatever I can afford. I'll put it in instead of waiting 5 to 10 years to liquidate it. If I want to liquidate it in 6 months, I liquidate it, provided there's demand for that real estate asset. So, yeah, I think it's a great question, because that's going to be one industry to watch for sure.
To your question though, about like paperwork and everything, so registry of deeds. So there are municipalities that have agreed to just essentially use a public chain as a public notary for these transactions.
Correct.
Yeah, that's pretty cool.
Yeah, I had the misfortune of taking 5 subprime mortgage companies public in my wild youth, and during the meltdown, Bank of America and others lost the promissory notes and the deeds of trust underlying the claims of the mortgage-backed bonds, and they were having their employees fraudulently create them, and the courts were throwing out these people, saying this is fraud on the court. So my question for all the techies is, how do you go to court with a token and say, Your Honor, I'd like to foreclose on your home because you didn't pay the mortgage? The judge is going to say, show me the promissory note, show me the mortgage in the old-fashioned real world, and I haven't had any techies talking to me about how they're actually going to keep all those PDFs integrous and connected.
It's back to just ease of use. So I'll highlight ease of use again and be repetitive. On the real estate side, whoever owns the actual asset, at least on this platform, can't sell more than 49%. So they retain control, and on the back end have a record of all the transactions occurring, who's agreed to what, who's paid what, et cetera, et cetera. So essentially, instead of coming into a court saying, hey, here's my big file with an attorney, you have it all on a drive, and on a computer, it's online, and it's easy to enforce. At least that's step one per se. So,
if you're personally curious about this, check out Dade County. in Miami. I'm pretty sure they're stepping up and allowing the use of a public blockchain for notary. So I think they're probably one of the leaders in terms of that kind of real estate and that kind of stuff.
All right, I think we have reached the end of our session here. This was a great, lively discussion. Please give our panelists a warm round of applause.